This is a presentation on the S&P 500 index, which is also known as a Standard & Poor's index. This presentation defines and provides a history on the index, but also serves its relevance on the broader scheme on its impact on the economy. The S&P 500 index is a valuated index according to the total market value of its shared indices using formulaic calculations. It serves as the largest cap on the common stock markets like the Nasdaq, American, and New York Stock Exchange. To provide some perspective, it comprises of 83% of all the three stocks. The number 500 indicates the number of companies represented in the index. Here are some of the notable companies under the S&P 500 index, like Best Buy, Google, Microsoft, and Walmart stores, among many others. However, these companies need to be successfully met by selection criteria to be designated under the S&P 500 index. The criteria are vigorous, and they are the market value of the company's size, its sales and profits, and the company's ability to meet its payment obligations in terms of liquidation. And obviously, these companies need to be pioneers and leaders in their industries. To provide some history, in 1923, the first stock market indicators were introduced with the beginning of 233 companies and 26 industry groups. In 1957, the market expanded to 500 companies, but these firms were added only if met by the selection criteria indicated earlier. In 1976, the index grew bigger with the addition of 40 financial stocks. In 1988, the fixed sectors were eliminated to allow for diversity and increase in representation of different portfolios. However, in 2003, only 31% of firms remained from the 1957 expansion, as certain firms fell below the criteria standards or were eliminated by mergers or other corporate changes. The S&P 500 has great importance as it serves as a benchmark of the stock market's performance, but also provides investors with information that allows them to make sound decisions on potential investment. Also, the S&P 500's implications are equally important. The index is used and weighed in proportion to the value of the common stock. This helps for investors to assess the buying and selling options of the stock, and it's the closing values that provide indications on the performance of the market, and the closing value is based on the last transaction price of the market. This graph represents the trend of the S&P 500 index over the past 50 years or so. There has been a steady increase until 2000, but since then an oscillating pattern is noticed in the last 8 years. Most notably, the index this year has declined tremendously with the current economic downturn and climate. Therefore, in conclusion, the S&P 500 index is a valuated index, and it has 500 companies represented under the index. Also, more importantly, the S&P 500 serves as a major benchmark on market's overall performance.